A company's true state is revealed by the Plimsoll model and shown in a set of graphs. The last 5 years of accounts data is distilled using our formula into these key performance areas, which show hidden changes. A rising line always indicates improvement, a falling line indicates a decline. We take into account these key performance indicators. Sales growth, trading stability, which measures the sales return on total assets. Profitability, is the company making or losing money? Working capital, gearing or leverage, which shows how much of the company is owned by shareholders and how much by lenders. Immediate liquidity is how much cash the company can get its hands on. And finally, the Plimsoll chart itself, which is a summary combination of all these factors, showing exactly how the company is performing in a standard format. The industry average is always green and the chosen company is always blue. It becomes obvious how a company is doing. It's clear from Eastman Kodak's Plimsoll chart that problems started back in 2010. We can see exactly what went wrong at a glance. Trading stability remains level. Sales were declining, but total assets were being cut at the same rate, so the ratio remained steady. The company was still not profitable though, so we can see from this falling blue line the company continues to lose money. Working capital was already below the industry average and fell dramatically, revealing the company had to sell more and more assets to pay creditors. Another falling line in the gearing or leverage chart shows us the shift from shareholder ownership to lender ownership. Notice the huge gap between Eastman Kodak and the industry average. Immediate liquidity remained good, but other charts show us what was really going on. All this is summarized in the falling Plimsoll chart. It's obvious the company had problems. 9 out of 10 failed companies had a low and falling line in the Plimsoll chart. The danger was visible up to 2 years before they failed. Not every company with a low and falling Plimsoll line will fail, of course, but it's a powerful indicator of how well they can withstand a bad debt, a downturn in their market, or the loss of a key customer, events often beyond their control. The Plimsoll chart also shows us companies who are doing it right, who are stronger than average or more profitable. Here you can see strong and rising profitability, working capital and immediate liquidity, and a correspondingly strong Plimsoll chart. They're the ones to keep an eye open for. Each company's accounts appear in their local currency and US dollars or euros to allow direct comparison for local and global studies. You can have this analysis on any company in your industry from across the world or in a specific region. The Plimsoll analysis is available in 3 different formats, printed and electronic. You choose what suits you best. The PDF gives you an up-to-date snapshot of the whole of your chosen industry in one file, easy and convenient and of course portable. You can compare many companies at your leisure. You get real-time results as they're filed by the companies by subscribing to Talent, our new online version of the industry report. It's always bang up to date, so you can keep a close eye on things. Business leaders the world over rely on Plimsoll reports to identify companies ripe for takeover, great to trade with, or those to steer clear of. Talent shows you what's what. Get in touch so we can help you choose which format will be most useful to you. You really can't let your competitors have this advantage all to themselves.